No, there it is. See, it does it every time.
Every time. It
just
knows.
doesn't.
It knows.
Well, it's up, everybody. How are you?
Hi, guys.
How are you?
I've had a very busy morning.
Have you?
Thank you.
You look nice.
I'm trying to impress you.
Are you?
Yes.
I'm
Are
way
you
impressed. I've been way impressed for a long time.
That's right, you have. I mean, thank you.
You're my buddy. What's up, everybody? How are you today?
I hope you're doing good.
Yes, so we have... Today's a very eventful day because we're going to be doing this video and then we have some other things going on.
Happy hour.
Happy hour today. So happy hour for RVM people here. They've been working really hard and it'll be really nice to reward them a little bit. Yeah. So what are we talking about today?
Do's and don'ts. Okay, so we normally talk about, okay, do this, do this, do this. But today we're going to talk about, don't do it. Don't do it. Don't do it.
Don't do these things.
Yes.
There are 10,
Yeah.
10 things that
Commandments.
you should not be doing when you're buying a home or you are in the process of starting buying a home.
So this is post-credit repair.
Yes.
This is, your credit's great, you are pre-approved, you are going to close in 30 days. Don't do these things. Right?
So, yeah. So it is super important because I've seen all of these before, as have you. The first and probably the one that I see the most is don't go buy a high-ticket item. Like a car or a truck or a boat. Don't do that
unless you want to live on it. Every single loan officer will tell you, do you plan to live in the car?
Right.
Because you will not be getting the house.
Yeah, I had a gentleman that bought a brand new Corvette. It was beautiful. But he did it 3 days before closing.
Oh.
And I literally had to walk him back to the dealership so that they could take the car and give me the documentation. He was sad.
I'm sure he was.
He was really sad. But he would have been much sadder had he not been able to get the house. And the reason why that's important is because we do, as do all lenders, do a credit check right before you close. And the reason being is we want to make sure there aren't any big debts like that will affect your debt ratio, because at the end of the line, we have to make sure and verify or do our due diligence that you're not going to default on this loan.
So, I'm going to say, so most of the time you're closing 60 days or so after pre-approval if they find a house.
Find a house right away, right.
Situations may vary. On a credit report, you're not normally going to see the new account show up in that 30-day window.
Right.
So there's something else on your list there that actually identifies that something's coming.
Which is?
Inquiries.
Yes. No new inquiries.
Don't go shopping.
Don't touch your credit. Like, don't even inquire about a credit card or anything like that, because we have to explain that. And if a new account was opened, you have to document it and what's the limit and what was the payment. Yeah, so don't do that. No new inquiries, none of that. Wait until after the loan's closed, please.
Right.
You know, this gentleman that bought the car, obviously he went back afterwards and got the car.
You basically say, can you just hang on?
Yeah, just hold on to it. Just leave it in the garage for me. Yeah, so no new inquiries. Another one, which this seems really basic, don't quit your job. I had one where this happened the previous month, and we had to move a lot of things around because they went and found a new job. So luckily they were easily qualified, but we had to delay the closing and wait for.
So this is not the time for a life-changing.
No life-changing events.
I'm getting a new house, I'm getting a new car, and you don't want to open your own business. And that's
yeah, don't become self-employed.
Yeah.
Because self-employed income is calculated differently, and that certainly causes issues.
Yeah, because when you're buying, you have to have W-2s. Like, there's like 2 years of W-2s.
2 years of W-2s, yep.
And then when you're self-employed, you have to have 2 years of 1099s, right? I'm going to get that wrong. I'm not a loan officer.
Right.
So if you decide you're going to quit your job and start a new business, you've basically said, I don't have income anymore.
Yeah, that hurts.
Yeah, don't do that.
That hurts.
That's bad.
One of the other ones you talked about with when we were going over this with regards to credit is don't close any accounts.
Yeah, this is, so I taught a class this morning and getting people to understand why this is important. You would think that closing an account is a great thing because it means I don't have that debt anymore. Because anything that reports on a credit report is basically you have debt.
Absolutely.
So when you would think that when you close an account for a loan officer, you guys would be happy and be like, wow, that debt is gone. To the FICO algorithm, that's a punch in the stomach.
Right.
Because your score will drop.
Especially if it was an account that you've had for a long time.
Mm-hmm.
If that really impacts your score, and your score could plummet. And again, we find that out. We've had several people, especially during COVID, where we've had to raise credit scores. All lenders have, right? And you get to a point where somebody's barely qualified, or they have at a certain credit score level, they reach a better tier of interest rate.
Yeah.
And when we re-pull that score, it goes down, and
now
then
you recalculate
we
everything.
do everything. Yeah, and I've heard of people. I haven't had anybody personally, thank goodness, that this happened to, but I've heard through the different Facebook groups for loan officers where they were at a tier of pricing, an interest rate, and then they went way down, and the rates went up, and there were points. So don't close any accounts.
Well, and the thing about that, if that should happen where you have to requalify them at a higher rate, you're going to have two things that are going to happen after the new loan hits. FICO is going to bounce around for a little bit because you're going to have a new maxed out loan.
Right.
You're going to have a loan that closed.
Right.
The good thing is give yourself 6 months. FICO's going to even out. The score's going to even out, and then you can refi.
Right. Absolutely.
But save yourself the headache of the 6 month change of having to pay more than you need to, and just leave it alone.
Right, absolutely. The other one with regards to credit is don't go and co-sign for somebody else.
You think?
That's number 5.
So actually, I am a don't co-sign period kind of person.
Yeah.
I have seen husband, and this sounds so bad, but I've seen husband and wife divorce. The divorce decree says he has to pay this and she doesn't. Divorce decrees don't hold up in court.
Correct.
You put your signature on something, you are responsible for it. So even when you're married, I don't like co-signing on anything.
Yeah, and a lot of people will do it to give some depth to their credit.
Absolutely.
Which boosts their score, and so you have a short-term benefit.
Right.
Problem is, most of your finances, especially when it comes to accumulating wealth and home buying and equity and things like that, that's a really a long-term play.
It is.
So, your short-term decision really does end up affecting you long-term if something were to happen, or even if that person, let's say that person comes into some financial hardship or whatever and misses that payment. Typically it's a credit card or a car loan or something like that, but even at that point, their credit goes down, or your debt ratio goes up because now you are partially responsible for that debt.
Yeah, it's a pretty bad situation, and most of the time when people, I remember when I first started, I would have people that were like, I co-signed on an apartment because they couldn't get it, and then they destroyed it and
out.
moved out.
Right.
I co-signed on furniture, and then they didn't pay the bill. Like that's really difficult. And I mean, even as parents, sometimes making that decision to kind of let your child ride it out on their own is difficult. But if you're trying to buy a house, just be careful with that stuff. I have a client who literally just started with me. He is trying to refi his house so he can pay off some debt. His son forgot to make his student loan payments, and he is now 90 days late.
Yeah.
So it completely kicked him out of being able to
So
refi.
if you're in the middle of a process, number 5 says do not co-sign for
Don't do
anything.
it.
Especially if you're in that process right now, don't go and co-sign something. Wait until we close, right?
Mm-hmm.
Number 6,
That's number 6.
don't run up your credit cards. Don't do it. This is your personal favorite, I think, because this one ticks you off more than anything.
Okay. I will put it to you the way that I put it to my class this morning. Consumers in America typically use their credit cards as a second salary. They don't mean to,
Right.
but the rules of the credit game are that you can have credit. You're supposed to use it unless
Right.
it's an emergency. Now, if you're playing the rules well and you know that you can pay that off in 30 days, then you can go ahead and use it. Don't do it while you're going to close, though. You have to leave it alone.
Correct.
Yeah, don't.
Yeah.
Don't pay for the moving van with it.
Right,
Don't do
because
that.
again, we run a credit report, we run a soft pull that will tell us if anything has changed in your credit profile. And if you went from a $200 balance on your $10,000 credit card up to a $6,000 balance, obviously your payment's going to change.
Yeah.
So a lot of
Ratio's a lot
times,
higher.
debt ratio gets higher, you might not qualify, then we have to have a difficult conversation. So certainly make sure that
Rob will walk you
that
back.
you don't run up that credit card.
He's gonna walk you back to Kohl's and
That's
be like,
happened
I need
before.
you to drop these clothes back off.
That has definitely happened before, so that's not good. Also, along those lines, which number 7 is don't miss any of your payments.
Oh my God, pay your bills on time. 35% of your credit score is dedicated specifically to how you pay your bills. It's 297 points. If you have great credit and you miss a single payment, you could run the risk of losing 100 points. And 100 points when you're buying a house is massive. Pay your bills on time.
Yeah, and even if you're in a refinance and you're not sure, always reach out to your loan officer, because any loan officer kind of worth their salt or their license, I guess, will tell you not to miss a payment. Don't miss a credit card payment. Don't, just because you're closing at the end of the month, don't think, hey, I can skip this payment and it won't negatively affect me. Because here's what happens: if closing gets delayed for whatever reason, or there's another issue and the loan maybe closes a little bit later, maybe there's a title issue or something like that, then you're going to be 30 days late because you're going to forget about it. And now you have a 30-day late on there, which could drive score down, all sorts of things.
So I want to include your current house payment on this, because
Yes.
a lot of people, the enticing part, especially at the end of the year to buying a house, is that your new home payment won't be due for sometimes 2 months. And so your loan officer has sometimes made you feel like, okay, well, we're going to close on this date, and so your next payment won't be due until blah, 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 and obviously your loan gets paid off when you do close if you're buying and selling. Make sure that payment is available and ready for delays. Because
Absolutely.
if something happens, like you said, and something doesn't work out, you are liable for that payment, and that is still going to report. And I'm telling you, having to explain that there was an error here, here, and here is still going to take months to hash out.
Yeah, and that goes along with number 8, which is don't change banks.
Oh, God.
Don't move, you might get an offer in the mail that says free checking, or, you transfer your balance over and we'll give you these features. Don't change your bank. Stay where you are. No, and I think the general rule is no major changes inside of the transaction. So anything we touch inside that transaction, keep it the same. Smooth and steady all the way through until we're closed, and you're good.
Keep your hands to yourself.
Yeah, keep your hands to yourself. That's a good one. That's actually pretty good. Also, when it comes to banks, and these next two are somewhat related, but no large deposits.
Where'd you get that money from?
Right.
Because that's what they're going to ask you.
Correct. You have to document and trace that. So if it's because you sold something or something like that, maybe you sold a boat, or you sold a couch or something, whatever, it has to be documented through a bill of sale and improving that value. So if it's something that you're planning on doing, wait until the transaction's over. If it's inside of the transaction, if it's before your loan closes, contact your loan officer, because they should be telling you don't do it. Had a gentleman who actually was breeding puppies and was selling show-worthy type of puppies of AKC lineage and winning shows and things like that, threw $4,000 in his bank account, and I'm thinking about it without consulting with me, and we had to go and source and prove that those were AKC registered puppies. They were of supreme lineage and had to prove the value of those dogs.
So basically, you just want to make sure you're not selling drug dealers.
Yeah, well, and also it really comes from money laundering. It's to prevent money laundering within a transaction, things like that.
So, it's funny when you talk about these things because you would think like it's really none of your business where I get my money from, but that's it. As soon as you, for lack of better, well, I'm sure I could come up with a better term. As soon as you get into bed with a loan officer, everything is their business. Your credit, your money, that's their business because it's all risk at that point.
Right.
They have to make sure that you're not going to go to jail. You're going to be able to pay everything that you're supposed to be able to pay realistically, their risk review. They need to, they're all in your business.
Yeah, and there have been borrowers in the past that have, I don't want to give you this, I don't want to give you that. I mean, if you think about it, you're buying a $350,000 house or $400,000 house, $500,000 house, whatever. Yeah, you may be putting a little bit of money down, but in essence, we're fronting all that money. We're giving you that money based off of the overall risk profile. So yeah, it's something we run into quite a bit. Just make sure you don't put a lot of money in that account because it appears as if you got it from somewhere else, either in your walls, on your mattress, whatever the case may be.
It was in the trunk, thank you.
We certainly don't want to have to document that because then it's just raising a question. I think we mentioned it here before, at least I have, about peeling back layers of an onion, and the more issues there are, the less warm, fuzzy feeling you give to the underwriter, which is super important.
Rob's smile slowly gets smaller.
I'm not the Grinch. That's not nice.
Disappears. And then once you explain everything and you get it all done, and his heart grows 3 times, and his face
You're
better.
painting me as the Grinch. You're actually doing this in front of me.
What?
I'm sitting here and you're still doing it.
Oh, it's better to talk to your face instead of behind it.
Now I know where I stand. That's really good. Folks, this may be the last video we have with
No,
Stephanie.
it's not. He loves me. He needs to.
She's wonderful. So the last one, and this kind of seems, number 10, it seems very basic, but I have run into this before. You're only as good, your loan is only as good as what we can prove. So we may have verified those funds, but if to use as down payment, closing costs and things like that. But I've actually had people that have taken that pool of money, because they have money in their pocket or under their mattress or whatever the case may be, they've taken that money from their bank account and actually spent the money like on something. Maybe it's a bunch of little things for the house or whatever the case may be. So we have to verify those funds. They have to be sitting in a bank account. And I've actually had people take that money out of that bank account and go buy whatever. So instead, if it's that number needs to be, let's say $10,000, but then we go and take a look and there's only $9,000 in there, they're not qualified for this loan because they don't have the funds to put down or to use as closing costs. So don't spend any money.
I always think about this at tax time because that is when a lot of people have an influx of money in their account to get you to the numbers that you need to be at.
Yep.
And when you're not used to having large amounts in your bank account, your gut feeling is, I just want to go buy some
Let's go
dishes.
buy something nice. Let's go out to really nice dinners for the month.
Yeah.
I mean,
and you can after. And obviously, reasonably, so you want to make sure that you can make your mortgage payments. We're not trying to give you a workaround before somebody yells at me for saying that. We're not trying to give you a reason to go and be irresponsible after you get the house. We're just saying if you want your closing to go smoothly, leave your money and your credit alone.
Correct.
For 30 days or even 60 days. You can live without it. Leave it be.
Yes, absolutely. And I think that, if you're listening to these and if you have any questions, reach out to your loan officer. Your loan officer will be able to tell you exactly what to do and what not to do. These are just general guidelines. There are certainly more that are out there, but these are the 10 most common that we see. So these will ensure that your transaction doesn't go south.
Yeah.
These will ensure that you'll get to the closing table smoothly.
Absolutely. Please don't call me for these. Call Rob.
Yeah, this is more of a loan thing. I mean,
Yeah.
there are some credit things kind of intermingled inside of there, but once you start that process, don't change.
Yeah.
Don't do anything. Just smooth sailing until you close, and then you can do what you want. But
don't ruin your credit though.
yeah, don't ruin your credit. So anyway, so now it's, I guess, happy hour for you?
So I feel like this was all about you.
Oh, sorry.
Yes, now it's happy hour for me.
Which is all about you.
After being here with you. No, I loved this because there are so many people who lose the opportunity to get to their goals over something that's potentially really dumb.
Yeah, absolutely. Something that you could have avoided pretty easily. And again, when in doubt, contact your loan officer.
No, I'm sorry.
Oh, contact your loan officer. Don't listen to her about this right now. She's just happy. She's taught a class. Now we're doing a video.
I feel good
and then
today.
she's doing
a
shindig here.
Yeah.
So anyway, that's it. How do they reach you if they have questions about credits?
Oh, I'm glad you said about credit.
About
because
credit.
if you say loans, I'm like, you need to call this dude.
Yeah.
That's me. 757-356-5756 is my office number. You can hit me up on Facebook, which is, since I've been tagged in this video, should be pretty easy to find. SOScreditsolutions.com, and follow me on YouTube, Stephanie Adams.
Absolutely. Follow her on YouTube. You might find this video there.
You will find this video. There's no might. It will be there.
And you can reach me if you have any questions about this stuff at robyounce.com. You can reach me directly on my cell, 757-286-8912. You can email me, rob.y at ovmfinancial.com. Or how else? Facebook. Yeah, you're on my Facebook right now probably. So reach out here, slide into the DMs.
Can we rename you Rob Y, the Fly Guy?
Oh my goodness.
No.
All right, we are definitely done here. Thanks so much for
Bye,
watching.
guys.
Appreciate you guys. Bye-bye.